Hello, and thank you for joining today's session. My name is Sophia Hangyu. I'm the product specialist at Mirae Asset, and joining me today is Sol An, the senior investment analyst here at Mirae Asset. For those of you who aren't too familiar with the company, I just want to give a brief overview. So we were founded in 1997. We're headquartered here in Hong Kong with over 20 offices worldwide. And we manage over a combined assets of over almost $200 billion. Of that, a significant portion is our ETF business, where we have over 490 ETFs globally. And part of our ETF offerings, we do have a strong in-house research team. We very regularly share our insights and knowledge on our website and on YouTube as well. So do feel free to head over there to check it out for regular updates. What do we mean by thematic investing? Well, it differentiates from, I guess, other forms of investing approaches such as, index investing, which is much more common for ETFs, as well as more traditional active investment strategies where they benchmark against, an index. But the way we kind of look at ETFs is really around thematic. So looking at identifying disruptive macro trends, and then also trying to identify which of the underlying investments will benefit from these trends over the long term. So this is very much taking a structural view of themes that will kind of have long-term impacts. For example, the transition of engine vehicles to electric vehicles or transition to renewable energy, as well as the topic which we are discussing today, which is on China consumption growth and China consumption brand. So it's great to be able to chat with you today, Sol. Maybe we can start off with a near-term view of what have we seen lately, especially after reopening in China?
Sure. So China consumption has showed a steady recovery so far. So if you look at the chart at the here, it's China's overall retail sales growth in orange line, which is versus 2019, basically pre-COVID level. So at the end of last year, it started with more or less similar level of 2019, and it has recovered to around 120%. So now 20% above 2019 level. Having said that, you'll see that the light blue line, which is more discretionary element, has shown somewhat slowdown in the last few months, whereas staples has continued to show stronger growth versus discretionary. So actually, reopening pace has been really fast, as you know, in China, and which is why at the beginning of this year, people had very high expectation of consumption recovery pace, and it has shown such pace during the CNY, which was especially we had early Chinese New Year this year. Having said that, I think March has been somewhat slower than anticipated versus what people expected at the beginning of this year. Whereas now I think now we're seeing, but then the Golden Week again has been pretty strong. So we want to see whether this strong recovery pace we've seen in Golden Week can be an inflection point for a broader kind of consumption recovery trend.
And have we seen any differences in recovery across different categories?
Yeah, so far this year, what has been stronger than expectation was luxury, because obviously not only in China, globally, luxury consumption, which is mostly consumed by wealthy consumers, have been much more resilient, and therefore we've seen a very strong growth even in China for luxury segment, and obviously travel related, because this is an area where it was directly impacted by COVID, which is why the pent-up demand was really high, and so travel related consumption has been pretty resilient so far.
Yeah, I agree. Luxury demand definitely has been resilient, because where we are based in Hong Kong, we have a lot of luxury stores around our office, and the queues, there are people lining up every day. So
right,
yeah, that's definitely the case. What do you think it will take for consumption to see a more broader recovery or more meaningful recovery?
Sure. I think the key is consumer confidence has to improve. You'll see that this is a China Consumer Confidence Index, and during COVID. So basically starting from like a year ago, March last year, when we saw nationwide lockdown in Shanghai and Shenzhen, consumer confidence in China went down to historical low level, to like mid to high 80s level. And after reopening, it had recovered to 95 levels, but still it is like 15 to 20% below pre-COVID levels. So we still have room to improve this confidence before we see the consumption happening. Then what needs to be done to improve this consumer confidence? I think it's basically job market and income growth, because income is what affects the consumption directly. So I think because I think unlike developed market, pandemic has been longer in China. And if we recall, like last year was zero COVID, year before we had some government crackdown on like internet companies, education. So I think it needs some more time to recover that confidence and also kind of economy recovery to lead that job market improvement as well as wage growth, which we are kind of seeing right now, that the government has been very supportive to these businesses trying to regain the business confidence. The policy has been easing. So I think right now, actually, like March retail number optically has been surprising on the upside. March overall retail sales in China grew over 10%, which was higher than 7.5% consensus expectation. And I think April and May, we're also having low base because that was when we had lockdown last year. So we will see stronger retail growth in the coming month. Then I think in the second half, we're hopeful to see more meaningful, broader consumption recovery driven by improvement in job market as well as wage growth.
Yeah, I think that's a good point about the job market and wage growth, because I remember last year we saw a lot of headlines around, especially youth unemployment, and I think that really impacts sentiment. And I think I also remember seeing stats around people going home for Chinese New Year and not necessarily coming back to the big cities. Has that started to improve, that situation?
Right. It's true that because the service industry, especially like travel related, like catering, those have come back. So I think those part of job market have improved, and which is why we've been hearing that the low income level have been seeing some deposit kind of growth in their bank account, meaning there has been some wage growth and job market improvement. Having said that, I think even in March, the youth unemployment rate is still high, because I think these are the people who needs to be like hired by these tech companies and more bigger businesses. And I think that is taking some time, and which now with the government's effort to boost economy, boost business sentiment, and through the easing policy to drive this, then I think the businesses need some kind of confidence to hire more people, and that would lead to, I think, more meaningful youth kind of employment.
You mentioned we're starting to see some deposit growth, but actually last year we saw a lot of excess savings, and we were actually, I think, hoping that those excess savings would drive consumption growth after reopening. Can you talk a little bit about that?
Sure. I think it is true, because last year the people had to stay home during zero COVID, and which is why their saving rate is for household is really high level. And I think that was also another reason the market was really excited about the consumption growth this year. Having said that, because of this consumer confidence, we still haven't seen meaningful kind of transition from that savings going into consumption spending, which we think will happen with the confidence improvement. But I think important point is that the saving is there, so people have money, so they are affordable consumers, which is very important. So it's more of their willingness, which will probably lead to releasing into the consumption, I think. So basically, when consumer confidence improve, I think we have big amount of saving that can transit into consumption in China.
So do you think we'll see a stronger recovery hopefully in the second half?
Yes, I think that's what we're hoping for. Yeah.
Okay, we'll look out for that. What about the longer term view? So the consumption theme, I guess, isn't a new theme. We have seen a lot of growth in the past,
right?
But Do you see this as a theme that still has, a long way to go or upside potential?
Yes, we do, because as you said, consumption theme has been well known, and even like as our firm, it's been what we've kind of been I'd say like focused on when we were investing in Asia, but we think it's still very early stage for the multi-decade kind of growth, because although China has already become the largest consumer of many different consumer goods across different categories, and I think this gives a good example. So you'll see that that outbound tourist expenditure on the left-hand side, that the orange line is Chinese spending, and they have already become the largest spender of outbound tourism globally in compared to even any other developed market. Having said that, the passport penetration, so passport holder out of total population in the country, is only still 14%, compared to much higher number for other developed countries. So I think it shows that this enormous number of population is driving this consumption growth. And what's more important is, if you turn into the next slide, it's because there are always emerging new consuming class coming in. So I think there are many countries in emerging market with not large number of population, but what matters is who are really the affordable consumers. And you'll see that the orange one, that there will be another 300 million new Chinese coming into consuming class. And on the right-hand side, more importantly, there will be a lot more upper middle or high income consumers coming in the next 5 years. And that's driving a lot of growth in different consumer categories and growing different good consumer brands opportunities in China.
So speaking of kind of driving growth, just kind of taking more of a macro view, how will that change China's kind of economy?
So I think if you'll see the next slide, that China has been like the government has been trying to kind of shift its economic model into more domestic demand growth from previously more export-driven economy. And it is true that since 2010, the private consumption to GDP in China has been growing. However, last 2 years, because of COVID, consumption was suppressed, and the export growth was so strong. Private consumption to GDP has come down again to 37%. But the big direction is that the government is trying to grow domestic consumption to drive the economic growth, and it is kind of shown by different policies that the government is emphasizing, such as urbanization 2.0, or like a dual circulation, enhancing social security, and even common prosperity. The government has been emphasizing that this is to make this 400 million middle class into 800 million in the next decade. So all this, the policies are supporting to grow domestic consumption, to grow middle class in China, which is driving force of all this consumption growth in the country.
Yeah, I guess it is quite a pivotal theme for the country, especially as we think about driving more quality growth in China going forward. So then let's dive into more of the looking at the consumer market. What are some key trends that you see that investors might be interested in?
Sure. Probably the first one, I think it's still the premiumization, and it's true time to time cyclically, like we have seen down trade as well. I think it's a global, this is also another global trend that we are seeing right now. Both luxury or premium segment as well as the value segment is doing well, whereas the middles get squeezed. So China, we think that the big kind of structural trend is still premiumization, whereas whenever there is some softness in overall consumption, we see some down trading. But we still like to ride on more of the long-term trend, which is a premiumization. And so here is a baijiu as an example. You'll see that on the left-hand side, the prestige is the most expensive baijiu, like Mao Tai, and then followed by ultra premium, and then super premium. So ultra premium would be like Wuliangye, brand like Wuliangye, and you'll see that the CAGR growth is expected to be faster at the prestige level, followed by ultra premium, and which is why we think and this is showing the baijiu, but we have seen this trend across different categories, which we'll also share in the next slides. But this is why we think the premiumization is one kind of trend or theme we like, and Mao Tai definitely is the probably one of few local luxury brand in China, because its heritage cannot be replaced by any of the Western companies or brands.
How was that? How did baijiu perform during COVID? Was it impacted, or was it quite resilient?
So I think overall baijiu obviously was impacted, because a lot of baijiu consumption is happening through social gathering, business meetings, banquets. However, I think because premium tends to be more resilient even for demand, like as we've seen even for the global luxury goods in the recent years, Mao Tai's price held up pretty well, and Mao Tai's demand was also pretty strong. And in the first quarter this year, actually again Mao Tai surprised reporting its growth. So sales in the first quarter grew 19% year over year, and earnings grew 21% year over year, which was higher than the consensus expectation, as well as the company's full year guidance of 15%. So it has shown the resilience similar to other luxury products globally.
Yeah, definitely. You mentioned there were some other consumer categories where premiumization is also a trend. What are some of those other categories?
Sure. I think the next one I'd like to share would be, I think beer is also another good example. You'll see the orange line is the premium beer. The dark blue chart is the mass low end. Then 2017, premium only accounted for 17%, but now it accounts for a quarter of the market. It has shown stronger growth, whereas the low end the volume has been keep declining. So 52% has now become 40%. And actually, I just met with China Resources Beer, which is another leading beer company. Even this year, when people worried about some volume like being slower in April, but still they don't see any change in terms of trend. So the premiumization is still continuing. They're still confident with their initial guidance, and so even again this year they expect the low end segment volume to slightly decline, whereas their premium beer is going to show another double-digit volume growth again this year. So although in some categories we've seen some trade down, but beer is another category that we haven't seen such trend, but still continue with the premiumization trend. Similarly for cosmetics, the premium cosmetics have been growing even double digit even during COVID, and now have become half of the total cosmetics market. So I think cosmetic is another category where we've seen premiumization going on, where Western brands and luxury cosmetics keep gaining market share. But having said that, I think I'll share in the next slide where we want to share about local brand. Although mass market in overall have been losing shares to premium, within mass market, it was clear trend that locals have been gaining shares.
Yeah, so you mentioned local brands. Maybe, well, I guess baijiu is definitely much more local, but then with examples like beer as well as cosmetic, oftentimes I would think more of foreign brands as being premium. Do you think that's the case in China's premiumization trend? Is it only the foreign brands, or consumers also going for more premium Chinese brands as well?
Sure. I think that's another trend we're seeing, that meaning that apart from that luxury goods, luxury meaning that like, LVMH, Chanel, Hermes, those European brands with like long heritage is still enjoying that luxury growth, and then Chinese are still preferring those European brands for those segments. Having said that, other than that, we're seeing local brands gaining shares, even across all the other categories like sportswear, cosmetics, automobile. I think initially it started with like home appliances, and then I think lately it has come to more like soft goods like cosmetics and sportswear, where we've seen locals gaining shares. So if you look at the sportswear, that's I think a good example of showing local brands gaining market share. So Adidas and Nike have been top two sportswear brand for many, many years in China. However, I think by this year, Nike will stay as a number one a sportswear brand in China. However, number 2 and 3 will be replaced by local brands like Anta and Li-Ning. And Adidas, I think the street is expected them to become number 4 player. So Adidas have lost their shares from 19% in 2018 to 11% last year. So I think that was one category where a lot of local brands gain share. Similarly, cosmetics, I mentioned earlier that luxury segment, because similar to other luxury goods, is still enjoyed by the Western brands like Estee Lauder, L'Oreal. However, in mass market, local brands have been gaining shares from like mass market brands of foreign ones. Like I think good example would be Korean brands that like Amore Pacific, LGNH, H&H. Now they think it's very difficult to like compete with local brands for the mass segment. So they're focusing mainly on their premium brands like History of Who and like Seohwa Su, whereas they're investing less for like Innisfree in China. They're actually closing most of their stores and now selling mostly in online or multi-stores like Watson's, because they think local brands have an edge, because mass market segment you have to really like follow the changes in consumer needs and demand, and local brands have been doing better job.
So what are local brands doing differently to gain that market share? Like how are they reaching Chinese consumers better?
Okay, so I think the most important thing, like product quality, of course, have improved, but like we know that like sportswear, for instance, even for Nike, Adidas, a lot of them, their OEMs are anyway like the Chinese companies made in China. So I think rather than like quality difference itself, it is true that the quality improved, but more important thing is the perception by consumers. And I think in the past, especially like the compared to millennials or Gen Z, their parent generation always thought that the foreign brands had a better quality, a better brand, deserve premium. I think that perception basically has changed, and then now Gen Z and millennial think that local brands are as good as foreign brands. So I think that mindset change is very important, the perception change. And secondly, as you said, what local brands are doing differently is because they're in local. I think they were really fast in like changing in fast changing dynamics in terms of marketing and e-commerce channels. So for instance, like because e-commerce penetration is much higher in China versus other developed countries like Europe and US, live streaming and short form video like TikTok or Douyin in China was first actually started and developed in China first. And so as a local brand, they know that where consumers are buying and the eyeballs are going much faster than global brands. So I think they've been able to launch their product though in those new kind of rising channel faster than the multinationals, because multinational also need to be much more careful when dealing with their brands, because their brands is very precious, and which is why they're much more conservative going into new emerging channel and until it's more proven. And I think that also makes some differences. And for instance, like another interesting kind of anecdote I had was that for live streaming, a lot of brands use KOL, and sometimes it's celebrity, and some KOLs are just like well-known KOL, but not necessarily like celebrities. So like foreign brands or multinationals, they usually use like third-party agent to like ask for our brand image, which KOL do you think would fit, and then they'll recommend and choose. Whereas local brands, for instance, like Proya, they know all individual like KOL, so they decide who they want to work with, and then they will just give it to their e-commerce channel or agent, like please use this KOL for this brand. So I think those are small differences, but making big changes.
Yeah, absolutely. I think live streaming, is definitely something that we don't have, well, I don't see a lot, kind of more in Western countries.
Right.
And it would be hard for Western companies to really adopt that and understand the landscape. I guess you've got influencers, which is equivalent, but not quite the same level of impact. Are there any other categories where you think local brands are really taking market share?
I think another one we'd like to share was EV. So basically automobile. So you'll see that this is a private PV market share, this China passenger vehicle market share in China by brand origin. And the orange line is the local brands. So local brands have been gaining shares in the past many years. And I think the driving kind of force was EV. So EV penetration have been rising fast, and then local brand has been benefiting from that and gained overall market share in automobile segment. And why is this? It's because similar to luxury goods, when we think of the traditional ICEs, people think that like Mercedes, BMW should get premium over local brands. However, when it comes to EV, because they think China is the leader in EV with highest penetration globally, and which is why when it comes to EV, other than Tesla, consumers generally think that foreign brands does not deserve any premium over local brand, because maybe Chinese product will be even better than any of the foreign product because they were the first kind of mover in this segment. And I think that's why I think EV penetration has helped overall kind of local companies' market share growth in automobile market overall. And if you look at the brand ranking chart as a result, for many, many years, like the JV of like Volkswagen, GM has taken like top 3 position in China automobile market by brand. However, starting from last 2 years, we've seen local brands taking this place. And last year, BYD has become #1 kind of China brand in China as in terms of volume sales. And even in the first quarter, again, BYD reported better than expected result, revenue growing 80% and bottom line growing over 400% year over year. So I think the EV growth has been, especially for like BYD, has been continuously very strong.
Yeah, absolutely. It's definitely been very rapid. I went back to Shenzhen for the first time in a few years, just a few weeks ago, and the amount of different brands I saw across cars, especially EVs, was just phenomenal. I've never seen so many brands I didn't recognize. And it was surprising that Tesla was actually not one of the main EVs that I saw on the roads. It was actually kind of the minority on the roads. So definitely Chinese EV brands have really taken off locally. You touched on kind of luxury demand being really resilient, even across, a lot of different categories, including EV. Why has luxury demand been so resilient, do you think?
So I think globally, as I said, wealthy consumers have been the most resilient, and which is why we've seen very strong stock performances of LVMH and all these luxury kind of brands. But this year, what's interesting is I think globally people are concerned whether kind of slow down in terms of spending in some of developed market, like in the US, can be offset by like Chinese consumption growth after reopening. And I think it is happening. And even not only for this year, even for long term, this is Morgan Stanley's estimates that the luxury goods growth driver will still be Chinese. So 2022, Chinese accounted for 28% of total global luxury consumption, and they expect Chinese will account for 37% in 2026, growing like 13% CAGR for the next 4 years. So Chinese are still very important kind of a growth driver even for global luxury market.
But do you think, I know that there's been a bit of repatriation happening with the Chinese government wanting to bring a lot of that luxury spending back to China. Do you think there will be an outflow of that as we see more outbound tourism of Chinese tourists?
Yeah, so like as we all know, a lot of Chinese were like very a big shopper, especially for luxury goods pre-COVID in Europe, Korea, everywhere. And then I think even back then, the government wanted to bring back those consumption to onshore. However, it was very difficult for them to do so. And in a way, during the pandemic, because a lot of Chinese were forced to spend in China, a lot of those consumption have been back. And also the government tried to leverage this and then give a lot of like favorable policy for duty-free business, like especially in Hainan. And they're also planning to open like city downtown duty-free store in Shanghai and Beijing, similar to Korea, because in Korea we already have that downtown duty-free kind of store. So you kind of shop before anytime before you fly, and then you pick it up at the airport. And I think that the Chinese government also trying to replicate those as well. So I think during pandemic, everything was onshore. This year will be kind of interesting. This year and next year actually is very interesting to see how much will be, staying onshore versus how much will be spent overseas. I think a lot of the global luxury goods, I think, or experts I talked to, think a lot of consumption will still stay in China because one thing is that, during pandemic, a lot of this luxury brands, like salespeople have built this relationship with consumers before, like you didn't know who are buying. And then now I think people care much because now a lot of goods not easy to buy, even if you want to. So you value this relationship with the salespeople more. But more importantly, now Chinese consumers, they also want to, like, I think even before pre-pandemic, during the consumer survey, showed that they want to experience more rather than spending much time on shopping, which they can also do already in China. So they want to, go more for, like tourists, have more, experience, eat more, like in nice restaurants rather than allocating their time for shopping like malls. So I think both from like government's policy, the company wise, as well as the consumers kind of demand perspective on their needs kind of during their tourism has changed. So we think the onshore spending will be still larger than what it was pre-pandemic, but we'll have to see that.
Okay. I want to focus now on kind of more reopening and the beneficiaries. Who are the main beneficiaries of reopening as it continues?
Sure. So I think more direct kind of reopening beneficiaries have been like hotels, like Macau gaming, and also like so if you see that the domestic flights have been already recovered to more or less pre-COVID level, and actually like domestic tourist itself during Golden Week was already above 20% above, like 19% above pre-COVID level. However, international tourist wise, what's I think demand is there. But then I think what's been constraining was the airline capacity. So which is why even if there is a demand, I think the resumption of airlines have been slower, which is why I think even this is a Goldman Sachs forecast. They think that international air traffic will recover only 52% by the end of this year and can only fully recover next year. So I think this year domestic tourism has still benefited more. But then Macau, which is regional, I think regional has been better than the international airlines. So the visitation to Hong Kong, Macau has been better. I think Golden Week, Hong Kong visitation was above like 50% of 2018 level. And then Macau also has shown a strong kind of recovery trend this year.
Do you have a sense of how smoothly these operations are scaling up? Because I remember last year, traveling around Europe, there was a lot of mess at airports as, a lot of logistics were just taking a while to get back to normal, and also rehiring of staff.
Right.
What are we seeing in China?
I think China is going through a similar situation. I was going to Shenzhen last week, and then I think immigration queue was not long, but still it took longer than before. And I also heard that what's another limiting the the overseas tourism is, I think overall visa process also like in most countries have been taking longer than pre-COVID. Yeah.
Yeah. I haven't even applied for my China visa yet. I need to do that. What about Macau? I know that Macau is, like you mentioned, a hugely popular destination for Chinese tourists. How have we seen the reopening recovery there?
Right. So I think visitation is around now like 70% of pre-COVID level, but I think what the industry is focusing is a mass GGR, so gaming revenue. So that part, I think during Golden Week, people estimate would have recovered probably like 85 or even over 90% of pre-COVID level. So I think the gaming revenue recovery has been pretty strong. And we visited, I think you also visited Macau. And then so those are the photos I've taken in February. And then I was quite surprised that to see a lot of like new projects they've built during COVID. Especially, I think that Londoner was quite impressive because before pre-COVID, when I went to Macau, I've seen Eiffel Tower and Venetian, but now having Londoner looked quite, I felt like a lot of Chinese would be interesting to come for tourism into Macau.
Yeah, definitely. I noticed a lot of tourists there. And also the hotel prices were not cheap at all.
No.
So, the fact that tourists are willing to pay those prices, I think just shows the pent-up demand that's there.
Right.
Yeah. So aside from tourism, are there any other kind of services related sectors, I guess, that are beneficiaries of reopening?
So I think the catering is another sector, but compared to tourism, catering is more overall consumption. So, but then we've still seen quite strong kind of recovery pace. I think during Golden Week, the catering growth, the restaurant revenue in China grew over 58% year over year. So it is recovering fast. And then more importantly for the leading company, like listed companies, I think because there's the operating leverage is huge, although the sales growth, more than sales growth, earnings growth this year is expected to be very robust.
I guess a restaurant as well as tourism are one of those industries that have been most impacted during COVID. Did we see a lot of restaurant closures or catering business closures during that time and subsequent market consolidation?
So because it's a very fragmented industry with a lot of mom and pops, there's no industry data I've seen in China. But if I recall, during 2020, when there was COVID, I read that the Goldman Sachs estimated that in the US, there were 100,000 restaurants closed during that year. And this number is compared to like 8,000 during GFC. So it shows like clearly how bigger impact of this pandemic gave on this industry. And considering that zero COVID policy, so the pandemic lasted much longer in China, I assume the impact would have been as much, if not bigger, in China.
On a slightly related topic, how is kind of the consumer brand landscape changed or competition landscape changed in China?
So it is a competitive market, but leading brands have been gaining shares. And so this is shows the top 5 brands in each category. And you'll see that the market share of top 5 brands have been gaining market share across different staples as well as discretionary the products. And which is why when we are investing in consumer companies, we like investing in leading brands or those brands we think will become a leader in the market.
And what about how do you think about consumer brands versus like online retailers, like for example e-commerce platforms?
So e-commerce penetration is already like 35% in China, but I think it's still a very good proxy to invest because you sell almost everything online. Having said that, I think because e-commerce penetration has already reached quite high level, I think generally market expects like teens kind of growth or like low teens kind of growth going forward. However, I think brand still, if you are investing in like high growth categories like sportswear, so probably more discretionary than staples in China. So higher growth categories and then leading brands, then I think those industry growth tends to be higher than overall consumption growth. And if you're leading brands or those market share gainer in that industry, then you'll grow even faster. And which is why I think higher growth opportunity may lies in the brand companies.
That makes sense. I guess there's more penetration opportunity there. And then lastly, I just want to ask, what are your views on valuations and kind of earnings growth this year?
Consumer categories have hit during zero COVID last year, and this year I think expectation was there, so it went up. But lately, because of a weaker, broader consumption kind of recovery pace, and along with overall market kind of correction in China, now it has come down again. So if you look at this is the valuation current. The dark blue line is the current valuation, and the orange dot is 5-year low multiple, and light blue dot are a 5-year high multiple in terms of PE, forward PE. And you'll see that most of the stocks, most of the categories are now currently trading near 5-year low valuation and far away from 5-year high valuation. So I think valuation for the sector as well as the market is currently at an attractive level.
And do you think how much of an impact does, external factors like geopolitical tensions have on valuations? And how would you address that with investors who might be concerned about that volatility?
I think it's a valid concern. So I think I agree that probably as a market and for many kind of companies may not receive that 5-year peak valuation again. I think there will be probably new normal in terms of PE. Having said that, currently, I think a lot of concerns and negatives are also kind of factored in. So which is why I think there is still upside to the current valuation.
Okay, well, let's hope that investors return to more view on fundamentals soon. Well, that's all we have for today. Thank you very much for joining us, and thank you, Sol, for your time.
Thank you.
If you do have any questions, please feel free to reach out to us. Do jump on our website and check us out on YouTube as well. Thank you.